morning, everybody. Sending out the bat signal here. Just give me 1 second. Give me 1 second. Move this over here. Can't see. The tube. Now. Send it out to everybody. Just in case people YouTube notifications ain't playing nice. Just sent out the back signal on the Discord. I'm also in the voice on the Discord if you want to pull up and share anything. Shout out to everybody that man, we went crazy yesterday, man. We did like a pop-up study session on the bonds yesterday. We was chopping it up, and then the Q&A started out real slow. I was about to end it because I'm like, man, y'all ain't got nothing. I was about to end it. And then D, I can't remember what D asked me. And then we just went down a rabbit hole. Lil Hawk, was it Lil Hawk? I think Lil Hawk, somebody said, I like when you just start running your mouth. I like when you just start running your mouth. I get what he was saying, but it just sounds crazy. You know what I'm saying? I like when you start running your mouth. Cause it's like she asked about what in the world is CLE? That was a good rabbit hole. Let me see your head him. Oh, wait a minute, man. Good morning. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to greet you with a nice hearty, well, thank you for always pulling up the Tim's Tidbit and supporting the channel. This is another episode of Hill Renee Price Action Review. Now that the pleasantries are out of the way, let me see who in the chat. Good morning to you. The birds are chirping. It is a beaut. I ain't got my phone in here with me. The computer says it's 72 degrees. Computer says it's 72 degrees. 22 older adults revealed what they are tired of at this point in their life. And I appreciate what? Angel Reese's WNBA salary resurfaces after fine. Sorry, y'all. My attention got caught. Good morning, Deborah. Good morning, Tish. Good morning, E-Rock. Good morning, Rhonda Green. Hey, I see more numbers than I see names, but she asked about the clues she missed for the bullish move. Oh, yeah. That's what it was. Yeah, she asked about the clues she had missed for the bullish move, and then we end up spiraling down a rabbit hole of regurgitations of my thought process when it comes to price action. Speaking of price action, let's get to it. The overnight price action. Let's get to it. Let's put it on 15 minutes. Let's get to it. Looks like price went sideways. Let's get to it. That is the 6 p.m. open. All of this right here, from this big drop to that big run, that was all on Friday, right? So if I take another line from here and put it right there, that is Friday. That's all of Friday, right? This, get another little line here. Okay, so I don't know if y'all can see these lines. Let me make these lines. Let me do this right here. So this right here, we're gonna get to the overnight price action. So this right here was Friday's price action from the Asian Open up until we started the overnight price action review. And that was Friday's price action from the Asian Open up until we started the overnight price action review. All right. And this right here, this green candle right there, that was the start. That green candle right there was the start of the New York session on Friday. And then all of this right here was the New York session, right? Can somebody tell me, right? Can somebody tell me in the chat? Yeah, ain't nobody in Discord. Can somebody tell me in the chat what we call this move right here? What do we call that move? Right there. What do we call that move right there? Pertaining to, when I say we, mean pertaining to the ICT concepts. What do we call that move right there? Let Judas swing. Very good. Let Judas swing. That's it. Judas swing. Very, very good. The Judas swing. Right? Let Judas. So we got hit with a huge Judas swing Friday. Huge Judas swing on Friday. And looking at the 15-minute time frame, right? You were not afforded any type of good entry either direction. Look, we're gonna get to the overnight price action. Ain't do a whole lot. That's why I'm just talking about this right now. You were not afforded, if you watch the 15-minute like as your entry time frame, right? You were not really afforded any type of good entry, right? If you rely on any type of retracement, right? If you rely on any type of retracement, you weren't afforded a good entry on the 15-minute time frame at all on Friday, right? So, don't feel bad about, man, what did I miss? Why didn't I, it was a huge move. People talk about they made money to the downside, the upside, but I didn't make any money. What am I doing wrong? What did I miss? You ain't did nothing wrong. It's just that if you watch the 15-minute time frame as your entry time frame, right? How much this right here, this pullback from 9 o'clock, right? From 9 o'clock until 12:15, this is the only pullback on the 15-minute time frame. Because look at it, right? Price came here, it went up, it pulled back down, right? That was it. For if you trade during the New York session, it started retracing at 8:45, and it didn't stop until 12:15, and then it started retracing to the upside at 12:15 or 12:30. It started going back to the upside at 12:30, and it didn't stop. So if you rely on any type of retracement in the 15-minute time frame as your time frame of entry, you didn't do anything wrong. You didn't miss anything. It just never retraced. It never did, right? If you watch the 5-minute, let's look at the 5-minute, right? If you watch the 5-minute as your entry time frame, there's no same thing. There's for the down move, right? For the down move, there's really not a click after. Let's move this over to 9:30. Right. 9:30 right there. Right. So at 9:30 open. Now, if you trade prior to the 9:30 open, right? Still nothing fancy up in here for as far as like retracing to try to get long or short on this move up. All right, so we shot up here, then we came down, then we pushed up there, took out the short term, displaced down. Yep, nothing. Once you start displacing here, nothing. No kind of retracement, no kind of retracement. Got here, hung out a little bit, right? Hung out a little bit, but no type of retracement back up. Kept bleeding down. It came this way, right here, right? It's not giving you, over here on the 5-minute, right? You had opportunity right around here. You know what I'm saying? If, you were paying attention to the clues, right? Around here, you had opportunity 1, had opportunity 2, right? Some may argue 3, depending on how much of a retracement you want, right? But you had a little something in there on the 5-minute if you trade in the afternoon, right? If you trade in the afternoon, you had something here on the 5-minute. If you trade in the afternoon, if you rely on any type of retracement to get your entry, right? But the morning, right? The morning, it didn't give you anything, right? It didn't give you anything. And then when you get down here in this area, right? Some may come in and say, hey, there's a little small fair value gap right there. It retraced into it. Tell me who in their sensible trading mind is trying to get short down here after this move right here. Somebody put in the chat and tell me, where do we sell from? Where do we sell from and where do we buy from? Right. Somebody put in the chat, where do we sell from and where do we buy from? Right. And then if you are looking to get short right down here after this move, right, put a 1 in the chat. Right. Rhonda, you selling in the discount? You selling in the discount, Rhonda? He'll learn to sell. She'll say she's selling in the premium. You selling in the discount, Rhonda? Right. And if anybody don't understand what I'm talking about, just in case, the move, this is the apex of the move, right? And when we come down here to where price started consolidating here, right, in this little area there, right, when price started consolidating in this little area right there, anything above this line right here, right? There you go. Sell premium, buy discount. Sell premium, buying discount. Don't try to change now. Don't try to change your answer now. Anything that's above this line right here is a premium, right? Anything that's below that line is a discount. Why? Because this is the highest high of the move. This is the lowest low of the move, right? Halfway in between, or 50% of that entire move, is equilibrium of that move. Equilibrium of the move is fair value between the highest high and the lowest low. This is the fair value of this move right here. So anything above fair value is a premium. Anything below fair value is a discount, right? When you're trading, when you're entering positions, you always want to sell in the premium of the move, of the price move, and you always want to buy in the discount of the price move, right? So you have two ways that you can participate. I'm just making this whole overnight price section a teachable moment right now as I go along, right? You have two ways of like, well, a slew of ways to enter trades, but you have two schools of thought when it comes to how to participate in the move, right? The main school of thought when you're trading ICT concepts is you let the algorithm tip its hand by making a move, right? And giving you clues of which direction it wants to go, meaning displacement. You got imbalances in there in that price leg. You have reference points that is leaving behind, like order blocks, breaker blocks, mitigation blocks. Is leaving reference points behind, so you have an idea of places it can retrace to. And then if it doesn't make it to Picasso's house, right? This is Picasso's house right here, right? If it doesn't make it to Picasso's house, I'm not just randomly picking that. It's you know what I'm saying? I can't even scroll back that far, but it's a weekly low. We already looked at that last night. It's a weekly low because, you know, we had a PD array down there, something. We talked about that last night. Okay. If it hasn't reached it made its way to Picasso's house yet, right? When it makes the move, let me get all this other stuff out of the way, right? When it makes the move with the imbalances in there, right? So looking at this move here, this is a 5-minute chart. Okay. We have an imbalance right here at equilibrium. Half of it's in the premium, half of it's in the discount, but it's right at fair value, right? So you can look at this move, and then you have other imbalances that's up here in the premium, right? So based off how price is moving, right? And then you look and say, okay, Picasso's house is right there. Is it logical for price, or is it feasible for price to come all the way back up to this imbalance, maybe that imbalance, maybe this mitigation block, to come back down to Picasso's house? Is it logical for it to come this far and come back down there, right? Or is it more, well, not logical, but feasible? Or is it more feasible to come back to fair value, maybe a slight premium at this imbalance, and then go to Picasso's house, right? Right. This is the more logical place to look to take a short based off of this time frame right here, right? And then you also have this over here supporting that. Okay. Now, you want it to retrace back to the premium to participate in the move down. Why? Because you want to sell above equilibrium, right? At equilibrium is a good place to sell because that's fair value, right? But ideally, you want to sell in a premium, right? So you want price to at least come back to equilibrium to try to participate in the move, right? You don't want to be trying to sell down here because the risk to reward is against you. The risk to reward is against you, right? Because if you were to sell here, yeah, in this case, it will work for you. But how is it going to continue working for you, right? If you sell here, right, and you're trying to go there, and price decides it wants to go back to equilibrium, right? It's more risk than reward at this point right here. All right, it's more risk than reward. Let's put it in here. All right. Because we don't want to just say stuff. We want to know that we're telling the truth. See, right there. You got a 0.71 risk to reward. That's a negative risk to reward, right? You're risking more than you're trying to get, right? You're risking 22.25 to get 15.75, right? That's a negative risk to reward. That's not a good trade. Okay. Second school of thought when it comes to all right. Second school of thought when it comes to trying to sell in the premium and buying a discount. All right. This is a little bit more advanced when it comes to the techniques, right? It's like you don't rely on a retracement, right? You don't rely on a retracement. You rely on like what the candles on that time frame are telling you. Now, this is far more advanced, and it's gonna require you to really know what you're doing, right? So, especially if you're just watching one time frame. So you have price, right? We had price come up here, taking out buy side. We took out this buy side over here, and then price started to break down, right? Price started to break down, right? And then when we came into the 930 open, okay, we pushed up here and then rejected off these equal highs right there. All right, let me get this stuff out of the way so you can see it. All right, the 930 open, we pushed up here and then rejected off of these equal highs right there. Once we rejected off those equal highs, the very next candle engulfed that candle that rejected off the equal highs, right? It can reject, it can close above, Closing above the highs and gets engulfed. I argue to say is a little bit stronger, but it engulfed that candle there, right? So at that point, you now have a change in the state of delivery right here, right? So when this candle closes, you have two options. You can enter as soon as this candle closes right there, all right, and put your stop above the candle. That was the change in the state of delivery. Or you can wait. This is a retracement type thing. Wait for it to come back to the change in the state of delivery, but that's going back to waiting on some type of retracement, right? And that's a way that you can participate in moves without just waiting for the change in the state of delivery at the reversal. But this one is far more advanced, and that's going to require you being very in tune with the algorithm and understanding what the draw is and where you are in the sense of like market maker models and stuff like that, right? In the sense of market maker models and all of that, understanding where you are, understanding what's going on, understanding what prices, that's far more advanced. The more I ain't gonna say safe, because everybody got their trading style. I ain't gonna say more confirmation. Everybody got their trading style. Whatever your risk appetite is, you know, there's two different ways there to trade the ICT concepts. But with the retracement way, you would not have been afforded any type of retracement opportunity to participate on this side of the curve, right there. And then on the buy side of the curve, you was afforded some opportunity over here in this area. Now, just being totally honest, if I was trying to trade on the buy side of the curve, this area here with the imbalances over here and the order block over here, I would not have tried to participate in this, right? I wouldn't have messed with this. Why? Because we have all of this imbalance down here, right? We got this whole buy side imbalance over here. I wouldn't have messed with this because I would have been watching this, right? Up in here. Now, this is where I would have got involved on this side over here, on this pullback right there. I would have got involved on this pullback right here because, and I'll tell you why. Well, Tim, why? Because once price came up, consolidate there, pushed up, retraced back like that, that move right there was the confirmation. Why? Because we got 1, 2 bissies and a volume imbalance right there. That displacement right there was the confirmation that I would have needed to say, okay, I can get long in this area. Price does not want to come back down here, right? This is a balanced price range now. Price does not want to go back down into that. We got sell side delivery. We got buy side delivery, right? We consolidated and now price is gone, right? Now, all of this is a balanced price range. Price is not coming back down here below these lows. I can participate in the move on that pullback right there. Right. As I told you on the 5-minute, you did have a couple opportunities over here. And I just want to zoom in and point those out so that people can see and understand what I'm talking about. Now, for all of those on Al Gore's internet that like to come in and say, hey, this guy is just talking a whole bunch of hindsight. Allow me to be the first to say, true gang know what this means. True gang know what this means. And with that being said, the market is open, the market is open, the market is open. If you are going to trade, please trade safely. If you're not going to trade, please take a copious amounts of notes so that you can go back and study the things that you saw today and apply it to your future trading endeavors. Please enjoy your trading day. Now, does anyone have anything for me? Does anyone have anything for me? Yes, it is. Yes, it is. Does anyone have anything for me? As y'all see, the overnight price action didn't do much. It ain't do much at all. That's why I just was talking about that other stuff and giving out some tips, because the overnight price action, it was like just, it didn't really do a whole lot. It didn't do a whole lot when, you know, it wasn't worth, I didn't even get up and look at the London. When I woke up and had to use the bathroom tonight, I peeked at my phone, said, nope, I'm staying in bed. Oh, we haven't done this in a while. And I know it's some new gang members here. When you're preparing your week on Saturday or Sunday, whenever you do your chart prep, you always want to come to the economic calendar. I like the way that Econo Day looks. And another reason why I like Econo Day, because I only trade the U.S. equity futures. And this is what it's based around. This is based around the U.S. markets, right? And I like the way it's laid out. I'm a American of the public school system, and calendars have always been laid out like this for us from Monday through Friday for the work week, Monday through Friday. You have Sunday through Saturday, but Monday through Friday for the work week, it's always been laid out like this right here. So it makes sense in my mind for me to look at the calendar going left and right like this right here. So you want to come to either econoday.com or forexfactory.com. Now, forexfactory.com it's geared toward Forex. It's called forexfactory.com. But since the dollar is like, one of the predominant currencies of the pairs, you know what I'm saying? You can come over here and just unselect all, select none, and just come down here to USD if you only want to see the stuff that applies to the dollar. But if you trade Forex, you can look at whatever pairs news for whatever pairs you trade, right? And then it's set up vertically. Like, my mind don't work like this when it comes to looking at a calendar. That's why I like the look of Econo Day, right? And then, and then sometimes the coloring of the folders be off, because stuff that is vital or really effective toward currencies may not be as effective. It might not affect the indices as much, because this is based off the dollar and the other currencies, and this is based off of just the how the market, as far as the indexes goes. So the coloring of the information may be a little different, but like the main ones, yeah, You get to learn which one are the main ones. So pick your poison. However you like to look at your news, pick your poison, Econo Day or Forex Factory, and then you want to go and look through your week and say, okay, we got manufacturing, ISM manufacturing numbers coming out Monday at 10. Right? Any high impact news, right? You'll learn which ones affect your instrument that you're looking to trade. Oh, with experience, you will learn which ones really affect and really create volatility in your instrument that you trade. Right? Like I know these are going to have different colors. Like, and on Econo Day, a red square with a white star, right? That's like red folder news over on Forex Factory, right? A white square with a green triangle, that's like an orange folder on Forex Factory, right? And then the black dot, that's like what is it? A yellow folder on Forex Factory. Okay, that's the difference. So it's like market moving indicator, them the ones that they expect high volatility, merits extra attention. That's like the orange folder. It could inject more volatility, so you want to watch out. And then the other key indicators, it really might not, they don't expect no volatility out of it. That's like a yellow folder, right? That's the difference in the color schemes, the two, what you call it, I don't know, the you know, like the little menu down there that show you what stuff mean. I can't think of what the legend. That's the difference in the legends right there, right? And then you want to plan your trade week around when you may want to be trading, right? Me, I like to trade on high volatile days, right? So I be kind of waiting for the high volatile news days before I really be looking for trades for real. Because as a day trader, you need volatility. You need the market to move, right? You don't want to get in a trade and just sit in the trade all day. That's wasting mental capital. And then at the same time, I'm not saying don't be in a trade at these times. Just you want to know when the high volatile stuff is coming up, because with experience, you're going to learn that some events, right, the market will behave a certain way leading into that event. Like if you got CPI, if you got GDP, if you got PPI, if you got non-farm payroll, if you got, it's, and for some reason on Econo Day, employment situations is what they call non-farm payroll on Econo Day, right? Because when you go into the report, you see it says non-farm payroll, right? So I know it is non-farm payroll from learning the ICT concepts, but it's actually called the employment situation, right? That's what it's called. Okay. And so, the market is going to behave a certain way leading into these events. All right. If you have followed Michael for any amount of time, he doesn't trade after Wednesday on non-farm payroll weeks because of his experience. He says for his style of trading, the market tends to perform more accurately in the beginning of the week than on Thursday and Friday of non-farm payroll for his style of trading. But you will learn how your trading style, your risk tolerance, your entry strategy. You'll learn how it performs going into big news and how it performs after big news. So then you can start to plan your week accordingly, right? You know, okay, we got ISM and PMI Monday, right? Construction spending. We got JOLTS and factory orders on Tuesday, right? We got ADP and PMI SMI on Wednesday. We got job numbers come out every week. International trade goods and trading goods and services on Thursday. We got non-farm payroll on Friday. Now you know what hot news is coming up. You know what time of day is going to be happening. Remember, time and price, right? So you're looking for any sign of manipulation around these high news events. Tim, you said all that just to give me why I'm looking at this at the end of your spiel. Well, welcome to my world. I run my mouth. Right? You want to look for signs of manipulation around these high impact news events. Right? And if manipulation rears its ugly head, then you know how to act accordingly. Right? If the manipulation doesn't rear its ugly head and it just uses the news to charge toward the draw, then you sit back and wait for the market to show you what it wants to do now that it has hit your draw. Meaning, if Picasso lives here, right, and price is trading like this, okay, Picasso is up there. Let's get Picasso. Somebody put in the chat who Picasso is for those who may not know what I'm talking about when I say Picasso. All right. Picasso lives there and price is trading like this. If we got 10 o'clock news at 10 o'clock, right? If price shoots down and takes out this sell side, and you know Picasso is up here, you know the draw is up there, you know price is moving bullishly, right? Thank you. Draw. It's the draw on liquidity, the draw, right? That's who Picasso is, right? Remember, Picasso was an artist and he draw, right? So that's the draw. That's why I call it Picasso. If 10 o'clock price shoots down, right, that's manipulation because price is drawing toward here. So it manipulates down now, right? If you're more advanced or seasoned, right, you could be looking for an opportunity to get a really good entry below these lows. You could even buy these lows, right? Because that's what the algorithm is coming down and buying these lows, coming down, running out buy stops, right? The algorithm is manipulating down and buying these lows. So if you're advanced, you can either be buying these lows or looking for opportunity to get long below these lows, right? But like I say, that's more advanced. So once you see the manipulation come in, you just wait for price to displace back up, give you some type of imbalance in here, preferably right in line with this breaker, because that would be a bullish breaker right there, right? And then get a retracement back into the imbalance, into the breaker to attack Picasso. And that's how you can use the knowledge of the news to help you help you plan for an entry. Now, if the manipulation doesn't happen, right, and it just uses the news to shoot up there quickly and take out Picasso, right? Now, this is when you can wait for price to show you what it want to do by using the 2 time frame down method, where if you're watching, let's say if you're watching a an hourly chart right here, and the price just shoots up on the news and takes out the liquidity that you were watching, you can use the 2 time frame down method, right? Meaning like it just with the standard time frames over here. Hopefully that's not blocking y'all. I got something blocking mine on my screen, but if you can't see, it's the time frames where it's 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, weekly, monthly. Just the standard layout, right? If you're watching an hourly and it hits Picasso, if you go 2 time frames down to a 5 minute, right, you're going to see where you are in a market maker model. If you go 2 time frames down, right? But Tim, what in the world are you talking about? Let me show you. Come on, watch this, right? So if I come here on this hourly time frame, right, we're dropping down right there. And if we look over here, okay, that's a weekly low right there. That's the week. Remember I told y'all it was a weekly low over there. I wasn't just drawing that line right there at the bottom of those candles for no reason. That's the weekly low I was talking about, because we've discussed this already. You know what I'm saying? I took trades in here. The gang would, that's why it came up, because the gang was watching this. The gang was watching for the draw down in there. And somebody was like, hey, the draw was down there. Why when we got down there, why didn't we keep going down? What did I miss? You know what I'm saying? For all the people who, you know, that's for the people who like, this guy's just talking hindsight. Yeah. Right. So because they like, people on Al Gore's internet like to lump everybody in the same category. They trade ICT concepts because they don't understand the concepts, right? And yes, the concepts can be complicated when you're trying to learn them, but once you learn it, you're like, man, this is clear as freaking day. It's not as hard as I thought. You know, I was making, you know, but what happened is when people realize it, people understand it, right? They get on Al Gore's internet just like me, and they tell people, I can show you how to understand the ICT concepts, but they put a very hefty price tag on it, right? But Tim, you're charging. Yes, I charge. I'm charging a little bit of money for my time, right? I'm charging a little bit of money for my time. I can realistically be charging a whole lot of money for the things that I do with the gang, right? I've asked the gang plenty of times, how much are you willing to pay for what we do in here? And they have given me some pretty nice numbers to think about. I'm not going to lie. And when you can ask them, when they told me how much they are willing to pay me for what I be doing in the gang, I told them, if I'm lying, I'm flying, and I'm sitting in this seat. Can somebody in the gang who remembers put a 1 in the chat if you remember me saying this? I said, take half of whatever you said you are willing to pay me to do what I do in the gang and put it into your brokerage account. Keep hanging out here with me, learn the things I'm sharing, and then start trading. I said, put it in your brokerage account monthly. And then by the time you're ready to trade, you will have all that money in your brokerage account to trade your account and not have to worry about anything. Deborah said, yes, 1, because I said 300. Deborah, have you been putting 150 in your brokerage account every month? Have you been putting 150 in there every month? Right. So I could be charging a whole lot more money than what I do, but I'm truly here to help. But a lot of people they learn that the ICT concepts are not as complicated as you may think. And when they figure that out, they start charging people a large amount of money. And let's talk about that for a second. Then I'm going to get back to what I was showing you on the chart, right? People who charge for trading education, I'm going to tell you, here's the gag. They are successful at trading because they're not relying on trading to make a living. They're successful at trading because they are not afraid of losing on a trade because they can afford to lose that money. It may look to you that they're over leveraging when they take 5 and 10 contracts, but they're not over leveraging in their world because they make more money from teaching than they do from trading. So if they take a loss over here, this is not hurting them. And when you trade without any fear of losing, you are so relaxed, you are so comfortable, and your head is crystal freaking clear. It's like you have a crystal ball. You feel like you can see the future because you're so clear about what the market is going to do. Why? Because you're not stressed about, I need to make money to feed my family. I need to make money to pay my bills. I need to make money to leave this job. I need to make money so I can have more free time. You're not worrying about that stuff because you're making money over here. That's why I tell people, I'll be like, don't leave your job. Don't leave your job for trading, right? Don't leave because if you leave your job for trading, now trading is your job. And now Georgia Power want their money. You know what I'm saying? Wild Cable want their money. If you don't full out own your home, that lending company want their money. Nissan financial want their money. Toyota Lexus, Mercedes. Everybody want their money. So when you're stressed about, I got to make money, if you afraid of losing the money, mistakes creep in. That's why educators seem so proficient at trading, because they're not worried about losing this money because they have other money coming in. They got other money coming in. They're not worried about losing this money. Now, back to what I was saying. 2 time frame down method, right? Now, let's do this right here. I'm going to put it in replay. And I'm going to come over here and I'm going to chop off that candle there. Why am I chopping off that candle there? Because this is our draw. Remember I said if the news come out and it takes off and it hits your draw, right? That's where we at right there. Remember I said if the news come out, it takes off and it hits your draw. Okay, in this case, the draw was to the downside. Picasso stayed down here. In this case right here. Flip over Picasso. Picasso is here. Boom. We made it to Picasso's house, right? So now, remember I said you go 2 time frames down. We're on an hourly chart, right? We go 2 time frames down. 1, 2. That'll be 5 minutes. You got the hourly, 15 minute, 5 minute, 2 time frames down. Go to a 5 minute chart, right? On the 5 minute chart, now that we've hit Picasso's house, if you know anything about a market maker buy model, market maker sell model, right? Now that we're 5 minutes on the 5 minute time frame, if you look here, right, it appears that we are at the turnaround point of a market maker buy model, right? That's what it appears to be. Okay. Here's your initial consolidation. So now that the market appears to be there, when the market starts to give you the confirmation, right? Whatever confirmation you use that we are on the buy side of a market maker buy model, everything on this side of this line, you just look for an opportunity to buy until you get back to that original consolidation, right? So at this point, once you get your confirmation that you are in a market maker buy model, now you know that Picasso lives above here. So you're anything on this side, anything on the right side of the market maker buy or market maker sell model, you're looking to do whatever that model's name is. So if it's a market maker buy model, whatever the X variable is in the market maker models, for those who don't know, the way you abbreviate market maker models is market maker X model. The X is the variable, right? So you can have a market maker buy model or a market maker sell model, right? So when you're on the right side of whatever the model is, you're looking to do whatever the X variable is. So when you're on the right side of the market maker buy model, you're looking for reasons to buy. If you're on the right side of the market maker sell model, you're looking for reasons to sell. So that's on the 2 time frame down method, whatever time frame you're watching, right? If it shoots to Picasso's house on you, if you drop 2 time frames down, you get a peek into where you are in the market maker model, and then you can decide how you want to, engage the market. Thank you, 80. 80 says this is a blessing and people don't know it. Thank you. I'm just a guy from Fort Lauderdale, Florida, who's sharing his understanding of something when it comes to this thing we call price action. All right. I trade ICT concepts. The people who trade ICT concepts, it comes with a negative stigma. You know, it comes with a negative stigma. I don't know why. Really don't care why. Okay, when the news came out, we started dropping before the news ain't even came out yet. We started dropping at a 950 macro. I thought news hadn't came out. News getting ready to come out now. So we started dropping at a 950 macro. Right? 950 macro, we came down and we've made a relative equal low. Right? Look like an exact equal low. What's that? See, the low on this candle is 52.95 even. Yep. And the low on that 4 a.m. candle, the London low, is 52.95 even. So we shot down, made an equal low to the London. All right. So now we got equal lows above us, equal highs above us, equal lows below us. The news just came out and we look like we might be attacking the equal highs, pushing toward the equal highs, getting close to the equal highs. Right. Equal highs above us, equal lows below us, pushing toward the equal highs, pushing toward equal highs. Chugga chugga choo choo. Will we get there? Chugga chugga choo choo. Will we get there? Right. So the 950 macro, we started pulling down toward the lows, and then we stopped right at the low. Right? Meaning we didn't poke through, we didn't get a mohawk, we didn't, because if you're trying to get picked up at 52.95 even, 52.94.75 has to print for you to get picked up. Right? It's not gonna 9 times out of 10, it's not gonna pick you up on a limit order if you're sitting at 52.95 even. You need the spread, and it's usually a 1 tick spread on equity futures. Right? We went into the wick of this 930 candle. Let's see if we hit CE of that wick. Did we hit CE of that wick? Nope, we didn't hit CE of the 15-minute wick. We were well above CE of the hourly candle. All right. Now we're pushing toward the sell side. Let's see if we get it. So when the news came out, we shot above that high right there. Right, taking out anybody. All right, I'm gonna put a line right here, and I'm gonna put buy side internal. Right. Okay, buy side internal, and then I'm gonna drop down to the 1 minute. Why am I gonna drop to the 1 minute? Because that's 2 time frames down. All right. So look there on the 1 minute, we were trading down here, and then on the news we shot up and took out the buy side above that swing high right there, and then we came down, and now we're pressing toward the low. Right? Will we hit the low? I don't know. Maybe we will. Right? This right here would be the manipulation off of the news. Right? Why do I say that? Because we went up here and took people out that were already short. Right? Anybody that was already short right there and your stop was resting above this high right there, they just came up and took you out of the game in less than a minute. These are 1 minute candles. Wow! Took you out. Right? And then now starting to push down toward the sell side. Right? And then it would scare most folks not to want to get back into a short. Right? It would scare folks not to want to get back into a short, and they would just be sitting here watching price go away, and they would be within their rights to be afraid because they just got taken out on that news wick right there. That's why you don't want to be involved in a trade when high impact news is coming out, because stuff like that. Now that it wicked everybody out, then price came back up into the order block, into the mitigation block right there. All right. So all in this area right here, we have a bearish order block sitting there, right? And we have a bearish mitigation block sitting there, right? So the red candle, these 2 red candles, in fact, but the red candle right there is your mitigation block. And then your green candle right there, that's your bearish order block right there from this price move coming down here. Because we went down, up, down right there. Right? Came down to an anticipatory reactionary point, right? Had us a shift in sentiment, and then we traded down again right there. This green candle on the shift in sentiment right there, that's your bearish order block, right? And then this high, low, lower high, lower low, that's your bearish mitigation block right there. Now price is just kind of hanging out. Let's see if we get the sell side by 1010. It's 1006. And then we'll call it. If we hit the sell side before 1010, or if we get to 1010 and don't hit the sell side, doesn't matter to me, but we're just watching it because we're inside because the 950 macro right here started pushing toward the sell side, right? The 950 macro started pushing toward the sell side. It got to the sell side, to the tick, and didn't take it out. And then the news came out and took us all the way back out and took out short-term buy side, right? Leaving the equal highs, right? So remember, we still got equal highs above us and equal lows below us. So the market is being very manipulative right now, right? The algo started running for sell side. The news shot us back up toward the buy side, but didn't take out. It took out short-term buy side and then dropped. And so we got equal highs and equal lows below us. Right. So this right here is the news wick. So I'm ignoring that. That's why I was looking at the down close red candle here as far as what we did. So because we came back into, we got an imbalance there, we got an order block, we got a mitigation block. That's all the stuff we came back up into. Right. I was ignoring like the news candle, looking at that as like that's just manipulation. I be moving my screen a lot like this because I be trying to get it where I can see stuff. But when I be squeezing it up, it be making it too small for y'all. You know what I'm saying? And so I be trying to make it bigger for y'all. I know that be driving some people crazy. Somebody even said that in the comments one time, like, man, he moves his charts too much. I can't watch his video. Make it big. Make it big. Oh, brother. I need to eat me some breakfast before I go to the gym. So I think I'm gonna call it. Unless somebody gang, y'all got anything? Y'all get anything? Got anything? Gang. Yes, you already know what's up, Lump. Gang, y'all got it. If y'all got some, gang, if y'all got something, I'll leave the Discord open for a little bit. I'll leave the Discord open for a little bit while I go fix me a bowl of cereal. And then I'll come back and I'll answer any questions that anybody might have. If anybody got any questions or if anybody want to ask anything, but I'll leave the what's name open. I'll leave the what time is it? 10:09. 10:09. We pushing. 10:09. 5 seconds left. 4, 3, 2, 1. 10:10. 10:10. 10:10. And we still pushing toward it. Right. Still pushing toward it. So take out that manipulation candle right there. Right. Price came down, touched the sell side, pushed back up into the imbalance and the mitigation block right there. And now we're coming back down, looking for delivery into the sell side right there. Will we get it? Will we get it? Let's see if we will get it. Let's see if we will get it. All right, man. If you're going to trade today, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today and apply it to your future trading endeavors. I'll see y'all tomorrow for another overnight price action review at 9 a.m. Same bat time, same bat channel. I think today is the last day for the 90% off 1 day pass evaluations for Apex. I have a link in the description if you want to try your luck at trading a prop firm. I trade with Apex. There's a lot of fake news out there about Apex, but hey, I let people do what they do on the internet. I ain't gonna hold you. Y'all know I was considering Top Step at one time. Tiny Trades put me onto how I could trade Top Step and Apex at the same time. I just have to do one through Trade-Evate and one through. Oh, speaking of Trade-Evate, my funded futures. Oh, I blew that hole. I blew that hole. And it was on accident. I ain't even gonna lie. I blew it. It was on accident. I blew that hole. That my funded futures account I had, I blew that hole. It was on accident too, man. I was trading. I was testing some stuff out on some Apex evals, and I was using the trade copier, and I accidentally selected the my funded future account too, because like in the trade copier, you can you pick the account, you pick the instrument, you pick the account you want to lead, and then you go through and you select the accounts that you want to follow. And you know, just sometimes the windows be little and I just be clicking and thinking I'm clicking the right thing. And so I'm out there testing stuff. And then I get an email. I got an email from my funded future, and it was like, a breach has been detected. A breach of contract has been detected. I said, what in the world? Breach of contract? I didn't even trade my funded futures. And I I'm here doing I'm here. I'm reversing, I'm flipping stuff. Cause it's like I'm thinking I'm just in some Apex accounts that I paid $14 for. I done blew that hole. It's gone. I said, oh well, I ain't buying another one. Cause with theirs, you got to pay like the $100 and something up. What with the expert accounts, you pay like the $100 and something for the 50K account. And then if you pass it, you don't have to pay an assignment fee. So you only pay that one fee. And I was like, I ain't buying no another one. I can't. Like with the Apex stuff, man, I done blow so many Apex accounts because they be having 90% off. You know what I'm saying? So like 90, I be pay $14.70. You know what I'm saying? Man, I done blow so many, you know. Boy, look at him. Cause they be cheap. You know what I'm saying? But I don't talk about that side capital. I don't that this is right. No, and I'm not offended. I'm not offended by you asking this, but I don't talk about that because this right here is a predatory practice that people have. You know what I'm saying? They say, "Hey, I'm a 7-figure funded trader, and I've taken 6 figures in funding this." This is a predatory practice that they have to lure people in that's looking for the golden ticket. It lure them into Willy Wonka chocolate factory. Don't go in Willy Wonka chocolate factory. He's luring kids in with candy, and he got all these little Oompa Loompas in the basement that he works at slave wages. Don't go in Willy Wonka's chocolate factory now. But I don't talk about that stuff because that's a predatory practice that they have out here on Al Gore's internet, and I'm here to be the difference, right? And everybody know how I feel. Everybody in the gang know how I feel. I don't give a flying flute if a person thinks that I am a profitable trader or not. No, you ain't got to apologize. I just don't talk about it. And you know what I'm saying? And I don't give a flying flute if people don't think that I'm a profitable trader or not, because I'm just here to share with those who want to receive. I treat trading like the gospel. I share it far and wide for free. Right? The people in the gang outside of the mentees, the people in the gang outside of the mentees, I told them a long time ago. I said, hey, you can stop your subscriptions, because now at this point, you're just signed up because you want to bless me for what I do on Al Gore's internet for free. Right. And then with the mentorship, I charged a little bit more for that, which is $24.99, because I do a little bit more with that. Like I spent a little bit more time, you know what I'm saying, as far as like, you know, the homework review. I'm putting, you know, so I'm going back and giving you an opportunity to talk to me directly every week about what's going on with the stuff that I put on the internet for free. Right. So I'm just charging a little bit of money for my time, but I'm trying to make it as affordable as possible, so that you're not paying me $5, $6, $1,000 a month trying to learn. Because I tell everybody, with this mentorship, I'm not teaching you how to trade. I'm teaching you how to read price. And once you learn how to read price, then you can go back and apply those skills into your entry model, your trading strategy, whatever you want to call it. Right. And while you're learning, you don't need to be spending all your money trying to learn this. You need to be saving your money, putting it into your brokerage account, and then for the cost of lunch with your lunch with a friend, you know what I'm saying? The cost of lunch with a friend, one lunch with a friend over the span of that month, you're spending that amount to learn and spend some time with me. Well, not learn, but get the mentorship. You know what I'm saying? And yeah, but I don't talk about that. I don't talk about my P&L. I don't talk about, like, sometimes I'll be sharing that stuff. I'll be like, hey, this is what I did today. You know what I'm saying? Because, like, you know, I'm petty and I like to rub it in the hater's face sometimes. Be like, hey, look at this trade I took. And I'll show, you know what I'm saying? I'll show that I took the trade, and then I show the P&L for a few accounts, you know, because I'm petty like that. But for the most part, y'all know what it is, gang. Y'all know what it is. People that keep on sticking how much money they making in your face, they're just trying to bait you in for something. And I promise you, every person, I ain't gonna say every, because it ain't nothing 100%, but 98% of the people that have all that, you know, I'm a 7-figure trader, I'm trading this much capital, I'm doing this right there. I bet you at the end they're gonna say, and if you want to know how to do it too and trade alongside me every day for the low price of $19.95, you too. Hey man, I'm hungry. It's almost time for me to go to the gym. I'm gonna stop running my mouth. Price is being very manipulative today. It's not, we have equal highs and equal lows below us, and it's just chopping back and forth, chopping back and forth, right? It's not delivering to either. It's being very manipulative. So I am going to get me something to eat, and then I'm going to go to the gym. Like I said, gang, if y'all got any questions, or if y'all want to chop it up about something, I'm going to leave the Discord open. I'm going to go fix me a bowl of cereal. I'm going to come back in here. If there's anybody in the voice, then we can chop it up about whatever you want to chop it up about. If it's not, then I'm going to close the Discord. I'm going to go out there and watch an episode of The Punisher, and then I'm going to go to the gym. Hey, man, For the rest of everybody else that's not in the gang, this has been your boy, Aranya Grande. That's Big Spider for those who don't hablo Espanol. The Discord is, you get in the Discord if you join. If you join, the Discord is for the channel members. Like if you join, if you want to be like, you know what I'm saying, in the gang, or if you want to be in the mentorship, if you click join, it's got different tiers. The silver, if you're in the silver, that's just, you know what I'm saying, you just give, it's like $2.99. Silver, you get in the silver, you do have access. When I just pop up in the voice and be talking, you do have access to that. But silver, we don't do anything outside of that, right? Just the random pop-ups. The gold, you have monthly Q&As on the first Sunday. We have monthly Q&As on the first Sunday at 7 p.m. And we do weekend chart prep. When I, you know what I'm saying, when I want to pop them and do weekend chart, I try to do weekend chart prep often, but I don't do it all the time. The Black Spiders, you get 2 Q&As a month. It's on the first and the third Sunday. And then, like I say, all the pop-ups and all of that right there. And then the mentees, that's the one that's the Black Spiders is, well, the gold is $4.99 a month. The Black Spiders is $7.99 a month, $7.99, not $700. And then the mentees is $24.99 a month. And you get access to all Q&As that's on the first, second, and third Sunday of the month. And you get homework reviews on every Wednesday at 7 p.m. Right? You get homework reviews, and it's in like Discord. And it's you join the YouTube membership, and once you join the YouTube membership, when you go to the member section, just look for the link to join the Discord. You go and accept the Discord thing, and then whatever tier you pick, then I'll put you in that tier in the Discord. But I mean, it's not necessary to, I tell people all the time, it ain't necessary to sign up for the YouTube membership, right? It ain't necessary to sign up for the YouTube membership. I try to, you know, talk as much as I can on these lives, right? And then, but the only benefit of being in the Discord is I pop up all the time. Gang. If y'all know that I pop up all the time, somebody put one in the chat. I pop up all the time. And people be like, God dog it, I missed it. Did anybody record it? They said that yesterday. Somebody was like, I fell asleep. Did anybody record it? But yeah, man. That's it. It ain't Shade Capital. It ain't necessary for you to join the YouTube membership just to get in the Discord, because I don't share here on YouTube. It's just that in the Discord, you got so much access directly to me. Like Lil Hawk said, I like when you start running your mouth. Because because I can't talk about price without talking about everything that I know in my head, because it's all connected. You know what I'm saying? So when I talk about the price, it's like I maybe talk about something you never thought about, but it's all connected. Like with the mentees, I'll be like, look, we haven't covered this yet. We're gonna cover it, but this. You know what I'm saying? So again, you don't have to join. I appreciate you asking about it. You don't have to join. Everything that I talk about in the Discord, I talk about right here on YouTube. You know, I talk about right here on YouTube. So with that, I bid you all adieu. Again, thank you for tuning in to another episode of Le Overnight Price Action Review. I know we ain't reviewed overnight price action today, but price action didn't do much. overnight. Hopefully y'all got something out of it. If you got something out of it, please like, comment, and subscribe, and share. Share. What was that? All right, man. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider. For those who don't hablo Espanol, I'll see y'all on the next episode. Y'all be safe out here in these straight streets, man. Gone.